Hi there. Thanks for joining us on episode 4 of our newly renamed Homebuying 101. This is a series where I sit down with some of my favorite lenders, and they are going to share some great tips for homebuyers about special programs and just the market in general as far as the lending side goes. So today we are here at SouthStar Bank with Tracy Talkington, who's VP of Lending, and she has worked with some of my clients before and has done a terrific job. They have got an amazing program that is specific to SouthStar only called the H.O.P.E Loans program. And I'm going to let Tracy take it away.
Thank you, Pam.
You're welcome.
So one of my favorite programs is our H.O.P.E Loan. And as Pam had said, it's specific to SouthStar Bank, which means that you can't go to another lender and get this same program. There may be similar versions at different lenders, but it's a little different. It's a little unique compared to, say, FHA or Conventional or VA. So those loans that most buyers go with can be resold on the secondary market, and they're usually backed by the federal government in some way, which makes them ideal for sailing between different entities, between Freddie Mac and Fannie Mae and other banks. So when you hear that your servicing has changed, that's what's happened, is basically that your loan has been sold to another bank usually. These loans, our H.O.P.E loans specifically, can't be resold on the secondary market because it doesn't meet those same guidelines. So if you're one of those buyers who you don't quite fit in the box of FHA, Conventional, or VA, this would be a great product for you. It's also ideal for first-time home buyers. You don't necessarily have to be a first-time home buyer. You just can't own a home at the time of closing. But it does fit, I would say the vast majority of the buyers that use it are first-time home buyers, because there is no down payment required. FHA requires 3.5% down. There's no way around it. Either you or a family member has to pay that 3.5%. Conventional is typically 3% with first-time home buyers only, 5% if you've owned a home in the last 3 years. But with H.O.P.E, again, there's no down payment. The other big perk of it is that there's no mortgage insurance. So if you're not familiar with what that is, it's insurance for the lender. To get you into that loan, you're required to pay every month a certain amount, depending on the criteria that you meet. It's a separate charge, but it's charged with your mortgage payment.
And it's also known as PMI.
Yes.
So when you hear PMI thrown around, that's what that means.
Yes, exactly. So if you want that FHA loan or conventional loan and you have less than 20% down payment, they're going to tack on mortgage insurance or PMI, which benefits the lender and is not like homeowners insurance that benefits you, the borrower. But this program has no PMI, so there's not that extra charge on it. It also has no lender origination fees. So when lenders do loans, part of the way they are able to do that loan is by charging you a fee for it. And sometimes it's also tied to the interest rate that you get. With this program, there's no lender fees for it. It's a community initiative. So we're trying to help the borrowers that are within our community who need this kind of program the most. So there's different ways to qualify for the program. Right now, and these can change, they're the bank's guidelines. So even though we're not tied to federal Fannie Mae and Freddie Mac guidelines, we do have to adhere to certain guidelines when we do this loan. We don't just pick and choose who gets it. One of the guidelines is that either your income right now, the guideline limit is $100,000 for Williamson, Travis, and Hayes County. It's $100,800, but I just round. If your household income is below $100,000 in Williamson, Travis, or Hayes counties, you can qualify based off of that income for any property within those counties. Now, if you make over $100,000 for the household, so anybody over 18 living in the house, their income is going to be counted. If those over 18, even if they're not on the loan, if your total income is above 100 but below $242,000, then you can buy in certain census tracts. So the way that works is you let me know what area you're interested in. I can send you kind of a general map, and it'll overlay which properties will fit that criteria. And it's not something where you're going to be, just searching needle in a haystack style. Like, we're talking a lot of the east side of I-35 qualifies for it. Portions of the west side do, portions of Cat Hollow, Avery Ranch, and then
Wells Branch.
Branch, yes. So it just depends.
Orchard Ridge.
Yes.
Crazy enough.
Yeah, Terra Vista. So it just depends on which area that the census has deemed as something that works for this program. So again, under that 100,000 limit, you can buy anywhere in those counties. Over 100,000 and below 242, specific to the property address. And I can pull those up pretty quickly if you have a house that you're interested in. So what I'd really like to show you is going over the monthly payment difference between an FHA, a conventional loan, and the HOPE loan. That's where you're really going to see why this program is beneficial to you. So let's just start the screen share here. So here we've got a reminder of what a monthly payment is made up of for most buyers, especially if you're buying with either 0 down or 3% or 3.5%. You're going to have your principal and interest, which is the loan itself, the payment. Then you're going to have escrow, which collects for your annual property taxes and homeowners insurance. And then you're also sometimes going to have private mortgage insurance tacked onto your loan, depending on what type of loan you're doing. So for the next example that we're going to go through, we're just going to be considering the principal and interest and the private mortgage insurance, the PMI. Reason being is that your escrow is going to change based off each property that you're looking at, because property taxes and homeowners insurance vary based off of the property. Principal and interest plus private mortgage payment insurance is going to give you a true idea of these three loan types compared against each other. So first off, let's take a look at the HOPE loan. If you're looking at a 400,000 purchase price and a credit score of 700, let's say, that doesn't necessarily matter for HOPE. You just need to be above 620, but it does come into play with FHA and conventional loans. It changes your interest rate and possibly your private mortgage insurance for conventional loans. Anyway, so let's take a look at the HOPE loan. Your down payment is 0, or you could put a down payment if you want to bring funds to closing. You certainly can do so. The loan amount is going to be 400. So that means your purchase price and your loan amount are the same. Your estimated interest rate, now keep in mind, these are the rates right now as we're recording this video, and they're just averages. For HOPE, it will be 6.39, which puts your principal and interest payment at $24.99. Again, there's no mortgage insurance, no PMI. So that puts your total payment at just under $2,500 a month. Now with FHA, when we look at that and you put 3.5% down, that means you're bringing $14,000 cash to closing, excluding closing costs. That's an important note I did forget on mentioning HOPE. The down payment is 0, but there are still going to be closing costs that either you or the seller will have to pay. So we're not taking those into account with these programs because they're all going to be the same regardless of which program you use. Your down payment will be $14,000. Your loan amount goes up a little bit because we're rolling in an FHA mandatory funding fee. Your interest rate estimated right now today would be about 6% for this loan scenario, putting your monthly payment, principal and interest at $23.14. And then we have to tack on that PMI that we talked about. And that's going to add $173 every month.
And worth noting on FHA, even if you get to a point in your loan where your ratio is below that 80% threshold, you cannot drop PMI. You have PMI for the life of the loan.
Exactly. Very good point. So now you can see the monthly payment is fairly similar for HOPE and FHA right now. Let's take a look at conventional real quick. If you're a first-time buyer only, you can do 3% down with conventional. Your down payment is going to be $12,000. Your loan amount will be $388. Interest rate right now is about 6.25, putting your principal and interest payment at $23.89. And your PMI is higher usually with conventional loans. They're not really geared towards first-time home buyers. So your PMI is a little bit higher with this one at $268. That puts your total payment before adding in your escrow for taxes and insurance at $26.57. Conventional is really not a contender, to be honest. But then when we take a look at the most important parts, a lot of people will focus on the interest rate. What's my rate going to be? What is my interest rate? The reality is that for most of us, especially first-time home buyers, the interest rate itself is not the priority. What you need to be looking at is how much cash am I bringing to closing? How much is this going to cost me of my savings? And then the other thing is how much is my total monthly payment? Those are the most important factors for our first-time home buyers. So as you can see with HOPE and FHA, your monthly payment is very similar. What you gain with HOPE in this specific scenario is that you have $14,000 that is still in your hands, either keeping that in your savings account, maybe you find a house that needs repairs. And either way you look at it, HOPE lets you have that 14 grand in your account versus going towards your equity.
And I stress this, especially with my first-time home buyers, It is so important that you're not house poor, that especially if you're buying a resale home, that you've got an account where you've got some cash set aside for emergencies. You never know when a hailstorm's going to come through and you're going to have to cough up a big deductible, or it's 120 degrees outside and your HVAC unit needs to be replaced. There are so many things that come along with home ownership in addition to the benefits, but very prudent to have a savings account where you're socking money aside. My goodness, if you could start a home maintenance account with 14 grand, you can breathe so much easier down the road if you have an emergency with your house.
Yes, absolutely. So it does set you up, and it's not costing you a lot as far as your monthly payment is concerned, even though the interest rate is a little bit higher. Conventional, we won't really go over that because it's not really a contender in this case. I'd be happy to go through all of this with any of you in person, over the phone, talk through all the pros and cons, and we can look at all three options.
Okay, so there you have it, the Hope Loan program, the advantages.
I think if there's anything to take away from this besides just the specifics of the HOPE program, is that there are a lot of different loan options out there. So just because a buyer gets turned away by one lender, if you're out there and you've applied with one bank and they said, oh, no, you're not a good fit, keep in mind that every lender can offer different products. So while I don't encourage that you go out and have your credit checked a bunch with lenders, I do encourage that you pick up the phone and call somebody within each bank, the loan officer there, and talk to them about your scenario and be upfront about any challenges that you've had. And that way they can help walk you through, hey, these are the loans that I think will work for you, or, you know, we don't have anything that works for you. And do that before you actually give them your social security number.
So that is a good question. I have been told a couple of different things when it comes to applying for a mortgage. I've been told if you're going to talk to different lenders and have your credit pulled, it's best to do it on the same day or within like a 3-day period. I've also been told it doesn't matter. If you talk to 10 different lenders, you're going to have 10 different hits. What's the truth on that?
Well, I'm not a credit expert, but I will say that in my own experience, I've been told that yes, keep them all within a 2-week period.
2 weeks. Okay.
However, I have had one buyer who kept them within the 2-week period. I believe I was his 14th pull. Yeah, I didn't know that up front.
Yeah.
So he got upset, and rightfully so, that his credit dropped pretty significantly, 20, 25 points.
Wow.
So I called the crediting company that we have that pulls reports, and they said, well, yes, the 2-week time frame is good advice, but 14 pulls in 2 weeks is excessive. So there's no hard and fast deadline. Just start with conversations with your lenders. Find the lenders that you like. And then from there, have your credit pulled no more than a handful of times. If you're lucky enough to have that many lenders that you want to work with and that have programs that you're interested in, have them all pull it within that same time frame. And then one thing that people forget about on the front end is that you typically, with most loans, you cannot lock your interest rate in at that point. So when you're talking to the lender for the first time, you probably haven't even found a house at this point. So then 2 months go by, you had your credit check done by, let's say, 3 lenders, and you picked the one that was the top at that time. 2 months goes by, and now most buyers forget to go back and circle around to those other lenders. So there's a chance where if you have options with multiple lenders, because you checked rates 2 months ago, you're not looking at the best rate today when you're ready to lock in your rate. So that's the advantage of having multiple lender options. For a lot of our HOPE buyers, it's a different scenario where the HOPE loan is the one that they're focused and narrowed in on. So it's kind of a different scenario depending on how many loan options you're looking at.
All right. Well, that's great advice. That's great information. Both of our contact information is at the end of the video. We would love to work with you and walk with you through the home buying process. Of course, SouthStar Bank has more than one loan option. Give Tracy a call because that HOPE loan program is a great program if it fits. And if it doesn't, she's got other options available too. But either way, you know that you're going to have a solid realtor and a solid lender behind you as you make probably one of the biggest purchases of your life.
Absolutely. Thank you, Pam. I appreciate being on, and it's awesome that you're doing this.
Well, thanks for being a part of it. Everybody have a fantastic weekend, and please don't forget to like and share and hit that subscribe button.